In fact, Nikhil Kumar is with us. He's the MD of TD Power Systems. Seems like a strong quarter, Nikhil. My question is that your inflow, your order guidance seems to have been achieved, 1,600 to 1,700 crores. Are you crossing this guidance? Are you upping your guidance? What's next?
Yeah, so I have to give a revised guidance. We're certainly going to give an upward guidance. I'm going to give this exact number after the next quarter, but it's certainly going to be more than the 1,500 crores that we have already guided to the market. It could be in the region of, I would say, 1,600 plus crores for this year.
And where is that confidence coming from? If I look at your Q1 as well, what has really worked for you this quarter and what has bolstered the margins most importantly?
See, we have diversified product ranges and we also have been supplying to various markets all over the world. So we're not dependent on a single market. For us, Europe has been particularly strong. The US market has also been very strong for us with the data center and artificial intelligence server market, which requires huge amounts of power generation. And we also got a lot of orders out of India from the hydro refurbishment sector in the last quarter. So, I think these trends continuing, and I don't see a problem for us right now to hit our numbers and exceed our numbers according to the rate of order inflow and the pending order book that we have on hand today.
Nikhil, good morning. Hiral on this side. So that's with regards to the order book, the order inflow and pipeline also seems to be strong, and a revenue guidance of upwards of 1,600 odd crores, which you will revise later on, is something we need to wait and watch. But with this, if you have to look at the capacity utilization, you're operating at full capacity. So what is the status of the new manufacturing facility which is in Karnataka now, and how much will that aid in terms of the revenues?
So the new capacity will come progressively on stream from September this year and will be fully in line by about December this year, maybe January this year. And we can go up to more than 2,000 crores of this capacity, which I believe will, we will be hitting very good numbers next year also, looking at the current year, current rate of order inflow. So after that, we have already started, working on using techniques like Kaizen and Japanese methods to see how we can push the capacity to 2,500 crores within the existing facility. So I see, at least for the next 2 more years, no further investments. We'll be flogging the assets.
And when it comes to the domestic markets as well, in the past, the domestic order inflows have been slightly muted. Strength has always come in terms of the export market. So if you could help us understand now, how are you seeing that recovery in terms of the domestic markets, and do you think it is sustainable from here on?
See, the domestic market for us is basically 2 major sectors. One is the large steam turbine business for large captive power plants for industrial applications, like a large cement plant or large steel plant, which requires, let's say, 30, 40 megawatts of power for captive use. That business is growing steadily at around 10 to 12% per year. It's not, I think it's very good that we have this kind of growth in the economy where we see steady growth year on year rather than go through boom and bust cycles. On top of that, there are large hydro refurbishment tenders for, in the market. And if we win even 1 or 2 of those really bump up our numbers to a large extent. So, what's giving us actually the gravy is these hydro orders. The steady growth is coming from the captive power plant steam turbine business.
Thank you so much, sir, for speaking with us and joining us live from Germany for this conversation and speaking with us exclusively this morning.